Well, this won't stop us from digging a bit deeper. Hans-Peter Burghof joins us now. He's a professor of banking and finance at the University of Hohenheim. Thank you very much for coming, because
Hello.
As a professor, of course, you have to talk about this topic all the time, even now during the summer break. I hope you're not yet fed up with it.
Well, I'm fed up and I would love to talk about something else. But the point is the crisis is still there and we have to talk about it and we have to solve it somehow. And this might last for a long period of time still.
Okay, well, somehow one gets the feeling that our politicians, at least now, right, with the election coming up, are in some sort of denial. Do you think this is the calm before the storm?
I think to some degree it is, and it's got two reasons. One, obviously, the elections. On the other end, the government, especially the German government, might be interesting to have the financial crisis a little bit more on the forefront, because the solution concepts of the Social Democrats and Green Party are not very persuading to the general public. But on the other hand, I mean, Draghi said all this is psychological. We have to solve it on a psychological level. So it's very important not to disturb anybody with anything we might know, but which might be, well, bad news.
Okay, well, let's hope that the summer break will last a bit longer if it's all about psychology and
well, in the end, it's not, because losses are there.
Exactly, yeah, especially, and that we've seen in our report as well, many European banks, they're still harbouring bad loans on the balance sheets, loans that could soon fall through. We prepared a little graphic here for you. Now, Deutsche Bank, for example, has reduced its portfolio of Portuguese, Spanish and Italian bonds in the last 3 years from 12 to 5 billion euros. Commerzbank, however, still holds bonds from crisis-ridden Eurozone states worth 11 billion euros. How risky is the situation, would you say?
Well, it is not that risky in both banks, but it shows a different degree of freedom. Deutsche Bank was able to get out of these portfolios, sometimes with losses. Commerzbank was not able to go out that easily because they have losses from somewhere else. If you look at Southern European banks, they're going the other way around. They increase their portfolio in risky government debt because they say, well, it's my country and we're doing something good for our country by these bonds. And if our country fails, we'll fail with the country anyway, so it doesn't matter.
Well, let's stick with those balance sheets for a while. I mean, there have been several stress tests for banks now. What have they achieved so far?
Well, not very much. Well, we should know, the public thinks stress tests are a solution to everything. If you're a specialist in this topic, you know a stress test is a very rough instrument to find out about something special scenario, what happens in this special scenario. There's so many different possibilities in the future. So I think this is not a good solution. And we found in many cases banks who passed the stress test were bankrupt very soon afterwards.
Do we have time for all this, though? Or do you agree? We also heard a report that the president of the German Banking Supervisory Board, BaFin, has urged the ECB to finally get down to business. Do you agree with that?
Well, on the other hand, she said, take your time to get things really done before you enter into business. We had a first try with the European Banking Authority in London, and they utterly failed. That's the truth about it. And now we must really let things go in a way that they function, and that will take a lot of time, maybe another 2 years, but if it functions then, that's good enough.
Oh, then you're even less optimistic than the president of the BaFin. You say 2 years' time, not next year. Now, once the ECB does get down to business and starts supervising, what exactly can it do and should it do to restore order?
Well, the idea is that it should interfere in countries where the national banking authority hasn't been strong enough in the past. The problem is, do they have really the right to enforce what they decide? And I'm afraid we were talking about sovereign states still. So if, for example, the Greek government says, but we see this otherwise, what shall the ECB do about it? So I wonder what will really happen if it's got really more force than the national regulator had in the past.
Okay. Well, Hans-Peter Burghof, thank you very much for joining us during the summer break.